everyone, and happy Monday. Welcome to Stock Market Today. Alyssa Corman, Ken Shreve here with a breakdown of what went down in today's session. Ken, we'll get to the action in the major indexes, gains across the board, and it's a big week of earnings. So we already have stocks moving on earnings, but what else are we going to be taking a look at?
Well, we have to take a look at a bullish move for Hasbro today, which broke out of a long consolidation on really big numbers. And then, Justin Nielsen and myself are doing a IPO webinar tomorrow. So why not take a look at a couple of IPOs that are performing pretty well? SentinelOne, which had a lot of positive analyst commentary today, and also Doximity.
Perfect. We will get into that and more info on the webinar. But first, let's look at the major indexes. Here's the NASDAQ tacked on a slight gain today, slightly in the green. We also had the S&P 500 and Dow gain about 0.2% each. The Russell 2000 up almost 0.3%. So we're continuing the win streak here. A pretty considerable streak of gains for the NASDAQ, even though today's gain was tiny, but who knows, with earnings this week, we could see a lot more action.
Yeah, it was really a day for energy stocks. That was the big area of outperformance for the market. But 5 wins in a row for the Nasdaq. What's a little bit concerning? Listen, we're talking about these yellow flags in the market, and you look at the Nasdaq's 5 straight gains, and you can see volume at the bottom, not really all that impressive. And then just before that, you see a lot of higher volume declines in the Nasdaq. So it really would be nice at some point to start seeing renewed signs of accumulation in the Nasdaq. But, just being in the summertime months, as we've said repeatedly, that might be a tall order. So I wouldn't call the NASDAQ an index necessarily under accumulation at this point, but it is showing that really sellers are having a hard time getting anything going here.
All right, well, let's take a look at the S&P 500 as well. Was able to add a little bit more today after clearing the 4,400 mark last week, continuing higher yet again today.
Yeah, 5 in a row, and like I said, a lot of energy stocks outperformed today, so that helped give the S&P 500 a little better performance than the Nasdaq today. But yeah, we're in a confirmed uptrend here, and nice to see the S&P 500 score its second straight gain above the 4,400 level.
And the Dow also in new high territory, clearing resistance, kind of set around some recent highs there. But what about the resistance for the Russell 2000? This is the IWM ETF, which tracks the Russell 2000. And we have a trend line set here, potentially a little bit of resistance at that level, but more importantly, it's still below the 50-day line.
Yeah, and you see the NASDAQ, the Russell 2000, the IWM ETF here actually was up nicely during the session, but managed to close near the bottom of its intraday range around 220. So this is an area of the market where there's still some damage. The technical picture of the Russell 2000 does not look very healthy, but that is certainly offset by five straight gains for the other major stock indexes.
Yes, and a big week for earnings. It is Hasbro kicking things off with a gain of over 12% on the heels of its quarterly earnings report, which showed strong growth on both the top and bottom lines. I mean, look at that top line growth accelerating to 54% from just 1% revenue growth in the quarter before.
Yeah, it's not often that I'll look at a stock very seriously with a relative strength rating of 32. A lot of that is hurt by the stock's, sideways movement pretty much all year. So while the market's been acting well, Hasbro has really just been kind of moving sideways and not doing much. But when you have the quarter that Hasbro reports, their earnings of $1.05 a share, that was more than double what analysts were expecting, and that 54% jump in revenue. I mean, that kind of that turns an eye. So there's something interesting going on here. And I also like the fact that Hasbro is able to break out of this very long consolidation. This is a stock that's been repeatedly getting resistance right around that round number of 100, but it just blew right through that today, closed up near its high. This is exactly how you want to see a stock that gaps up, hold gains throughout the session, and close near its high. So good, strong breakout for Hasbro today. pretty clear signs of institutional buying. And I think there's an interesting fundamental story here.
Yeah, and we've been talking about other leisure groups, but good to point out that this group is ranked 64 out of 197. So definitely nothing to sneeze at there, Ken,
Yeah.
and very strong reaction to the report.
Yeah, firmly in the top half of our 197 industry group rankings. You can see the estimates are pretty good. So, I mean, this is a company that has struggled. You can see it's been growing in recent quarters, but this quarter was definitely looked like a turnaround. And to see the breakout today, I think it's very bullish.
Okay, and as promised, analysis of two recent IPOs. So we have SentinelOne, ticker is S. Looks like it backed off a little bit from the 50 level, but gained over 6% today, Ken, working on a nice IPO base.
Yeah, so you have artificial intelligence here, and you have cybersecurity. So it's in a very strong industry group, and there's a lot of security software stocks out there that are leading the market and really outperforming thanks to very strong fundamentals. So SentinelOne is a new name here. Just love the IPO base that is shaping up here. It's not profitable yet, but look at the revenue growth down at the bottom, ranging from 96% all the way up to 108% year-over-year growth. If we go over to the weekly chart and just see, this is just a classic example of an IPO base taking shape here. It's just just a little over 2 weeks into a new consolidation, the relative strength line poking into new high ground. So this stock is looking pretty good. It's definitely on breakout watch, and pretty compelling product that the company is selling here.
Right, and we know that IPO stocks can be hard to handle sometimes, some added risk. I know you and Justin will get into detail on that, but do you see an early entry perhaps taking shape here with SentinelOne, or what would you like to see that would provide a lower ish risk entry here, because we have 8% to go to the IPO base breakout at this point?
Well, this is interesting because we're going to take a look at Doximity in just a moment. But ideally, this stock is going to continue to work its way higher. I really don't see an early entry here, but I would like to see it get up, over that 52 level, and then maybe start to drift lower. One last little shakeout before a breakout over the 54 level. So it's rallied pretty nicely from 41 up to about 49 in maybe a couple weeks time. So that red line that you drew there, might be an aggressive entry if it breaks out over that recent high, but what's most important to know right now is that this is just a classic IPO base taking shape. And I know what I'd like to see happen, and it just goes up near its recent high and then just kind of drifts lower, one last little shakeout, and then maybe we get a bona fide breakout here.
That would be good to see. And speaking of IPO-based breakouts, have to look at Doximity today, up over 9%. This is a stock that we've been tracking since its debut back in June. We have earnings coming up in a little over 2 weeks, but this is a stock that we were talking about potential aggressive early entries as it cleared resistance over the 54 level in the base and really surging higher over the last couple of sessions, Ken.
Yeah, and it looks like it might have even cleared an aggressive entry late last week as well. Yeah, right there. So if the name that we just looked at, SentinelOne, if it does what Doximity does here, I don't know that I would be a buyer. And even we added Doximity on the leaders watch list today. We knew there was a possibility it was going to break out over its recent high of 65, but we were hoping it would just kind of come up towards 65 and drift lower. So we're going to keep it on the watch list for now. We were very reticent to add it after this. It's a $45 stock that ran up to over 60 in a pretty short amount of time. So we kind of felt like we'd be chasing it a little bit, but this will stay on the watch list because we know the price action we'd like to see from here. We'd like to see the stock hold gains, trade sideways, show strength and support. And if it does that, it'll give us another opportunity to get into the stock. But this looks to me, it's made such a big move in such a short amount of time. I thought it was kind of a risky buy today, but it could work out.
Well, a lot of lessons to be learned from IPO stocks. They can offer investors the potential for huge gains, but you have to treat them a little bit differently. And I know you and Justin are going to provide our audience really great information for how to handle IPO stocks and a lot of this new merchandise that we've seen coming to the market over the last couple of months too, and lessons to be learned from the winners of last year.
Yeah, it'll be pretty in depth, and certainly Doximity and SentinelOne will get some attention. But we've got probably 8 or 9 other IPOs that we've got a close eye on. They're all very similar in terms of the revenue growth that they're showing in recent quarters. Not all of them are profitable, but when you have that new going on, like a new product, new service that's fueling big revenue growth, sometimes we're patient for that growth to make its way to the bottom line. So we'll be talking about a lot of newer companies, stocks that we think have the potential to be stock market leaders, and a whole lot of other information as well. So it's going to be Tuesday, tomorrow, 11:30 a.m. Pacific time, and I think you can just go to investors.com/webinar
Yeah.
to sign up.
That you can. And Ken, since it is earnings season, we're really in the thick of it. It's a big week. Do want to provide our audience with an early look at Tesla's results. The stock up after hours about 1% in the initial reaction to the results. Looks like it beat on both the top and bottom lines. We had earnings coming in at $1.45 a share versus estimates for 98 cents a share. Also seeing a beat on the top line. Revenue of just shy of $12 billion versus estimates for $11.3 billion. So Ken, if Tesla can keep it up and maybe head higher during tomorrow's regular session, how do you think investors should be handling this stock?
Well, listen, the stock has been a big laggard for a while now. However, it's not a broken stock. You can see how it kind of pulled back in price, ran up to the 700 level, and then came down and kind of found support where you'd expect it to find support in the chart. So so far it's still early in after hours trading. Stock's up about 1%, but a lot of technical traders are going to be waiting to see if Tesla can make a meaningful bid at that 700 level again, and if it can move past that with some conviction, with some volume, I think that would be an actionable time to enter the stock. So we'll see if the after hours gains hold here. More importantly, see what it looks like during the first couple of hours trading tomorrow. But a big quarter of growth was expected, and it looks like they delivered.
Okay, well, we will be tracking tomorrow morning on IBD Live, taking a look at Tesla and other stocks that are set to issue their quarterly reports later this week. We have a lot of the big tech giants, so looking forward to that. It's always a fun time around here, no matter the day. There's always something interesting to talk about, but especially earnings season. So Ken, looking forward to your analysis of that and the IPO webinar that you mentioned. Lots of stuff going on as always.
Looking forward to it.
All right. Thanks, Ken. And thank you all for watching. We will see you back here tomorrow. Check out investors.com/IBD Live for our daily morning live stream where we analyze stocks in real time. And I bet you will be touching on Tesla. We'll see you then.